Imagine waking up in the morning, opening the market, and seeing red almost everywhere. Google is down, Palantir is down, Oracle is down, Netflix is down. Even some of the strongest technology companies are struggling. At first glance, it might look like investors are panicking. But if we look deeper, we discover that something much bigger is happening behind the scenes. Today, we're going to break down exactly why technology stocks are falling and what smart investors are watching right now. The stock market is driven by two powerful emotions: fear and greed. Over the past several months, investors poured billions of dollars into artificial intelligence companies. Many technology stocks reached extremely high valuations. But after such a massive rally, investors began asking an important question: have these companies become too expensive? As a result, many traders decided to lock in their profits. That is exactly why we are seeing widespread selling pressure across the technology sector. Google, represented by Alphabet, fell by more than 1%. Investors remain concerned about increasing competition in artificial intelligence. The company is investing enormous amounts of money in AI infrastructure, data centers, and cloud computing. Although these investments could generate huge profits in the future, investors are worried about rising expenses today. As a result, the stock has come under pressure. Oracle also moved lower. The company has become one of the biggest beneficiaries of the AI revolution, but expectations have risen dramatically. Whenever investors expect perfection, even small disappointments can trigger significant selling. That appears to be what happened today. Netflix shares also declined. The company remains highly profitable, but investors are concerned about slower subscriber growth and increasing competition from streaming platforms around the world. When uncertainty rises, growth stocks often become the first targets of selling. Palantir has become one of the most popular AI stocks in the world. Its share price has increased dramatically over the past year, creating enormous profits for investors. However, rapid gains often attract short-term traders. When those traders decide to take profits, the stock price can fall very quickly. That is exactly what we are seeing now. While many technology stocks turn red, Microsoft managed to move higher. The reason is simple. Investors continue to believe that Microsoft's cloud business, artificial intelligence partnerships, and enterprise software ecosystem will remain dominant for years to come. In a market full of uncertainty, investors often move their money toward companies they consider safer choices. There is another important factor affecting the market. Investors are closely watching the Federal Reserve. Higher interest rates increase borrowing costs and reduce the present value of future earnings. Because technology companies rely heavily on future growth, they are often affected more than companies in other industries. This is why today's market decline is not necessarily a disaster. Instead, it could simply be a normal correction after a long rally. The technology revolution is far from over. Artificial intelligence, cloud computing, cybersecurity, and automation continue to transform the world. The question investors must ask themselves is not whether technology will grow. The real question is which companies will emerge as the biggest winners. So, what do you think? Is this a buying opportunity, or is an even larger correction coming? Let me know in the comments. And if you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications so you never miss another market update.